A very warm welcome to you. Thank you for joining us on Business Incorporated. I'm Chimezie Obi Iwago. On the show today, Zimbabwe inflation soars to new 10-year high of 31%. Canada fines Glencore mining unit for Congo risks. Plus, Zambia denies White House claim that China is taking over its power utility. We'll start off the program with the markets. And here on the African continent, both the NSE and the JSE indices were down at intraday, with the NSE index trading low at 0.17%. The JSE index was down 0.35%. Egypt, however, was up 1.55%. Kenya closed in the green on Friday. And the Middle East market moved to the positive direction at intraday, except the Qatari Stock Exchange, which bucked the trend down 0.07%. Abu Dhabi and Saudi were both up 0.72%, while Dubai went up 0.28%. And in Europe, stocks traded lower in morning trade amid escalating concerns of a sharp slowdown in global growth. Investors are also looking ahead of the December meeting of the Federal Reserve's policy-making arm. The Federal Open Market Committee is expected to hike its benchmark overnight lending rate for a fourth and final time of 2018 this week. For more on this and other developments in the European space, Ulrich Bartz joins me now. Hello, Ulrich. Good afternoon. A beautiful week to you. Nice to see you again after a long time.
Thanks. Great to be back with you. Thanks.
Now, the Federal Reserve meets this week for the last time this year, almost certain to raise rates once more. Everyone's still pecking their ears despite that, isn't that?
Yeah, I think that anything else but a rate hike would be very surprising, and I think it would be a little bit shocking to the market if the Fed didn't move. It'll move just like it did in the other rate hikes that it took this year and before, a quarter percentage point to move the Fed rate even further up. For next year, though, it's expected that the Fed will ease the tempo somewhat because of the slowing economy. But it probably won't ease totally. It probably won't stop raising rates suddenly because the job market in the United States is still booming, and the inflation is also at a point where the rate hikes at the moment are at a level which are almost compatible to that. And you also have to see the effect of spending, perhaps, by the Trump government. So the Fed is in a difficult position. The market is in a difficult position because it's seeing higher rates affecting the attractiveness of equities in the market. So this meeting, starting tomorrow and finishing on Wednesday, will be in strong focus. It's basically the event this week, and expect a strong reaction on Wall Street on Wednesday, and then on the next morning, Thursday, here in the European markets.
All right, let's come back to Europe. What's the mood like starting into this last week before Christmas? A Christmas rally is still seen as a possibility?
I don't think so. I mean, there's a touch of Christmas here in the Frankfurt trading floor. You can see the trees behind me with those nice lights on, reminding us that Christmas is just up ahead. But when you talk to the traders, a Christmas rally is not up ahead. And you can see that behind me on the board, the DAX making an effort to climb a little bit, but then running immediately out of steam because of that nervousness ahead of that important Fed meeting. And, also getting very mixed economic signals from the European market. The ECB, for example, last week, the European Central Bank warning about a weakening economy. So when I talk to traders here, I'm getting the impression they're wary, they're tired, and they're looking at a very difficult time ahead, they think. Very few optimists left.
Right, let's look at some corporate news there. And Deutsche Bank is again in focus at the beginning of the week. Reports indicate the Persian Gulf Emirates, Qatar, could be ready to increase its stake in Germany's troubled but still largest lender.
It's an interesting piece of news. The share isn't reacting as one might have thought. It's going down a little. Apparently, people waiting for confirmation on this, and the state of Qatar is already among the major stakeholders, as you mentioned. They hold about 6% directly, and another about 3% over derivatives. It's being said, and if it went even more, then it would have even more influence on the bank. And I talked to an analyst earlier in the day, and he said, interesting development, surely driven by all that talk about a possible merger between the Deutsche Bank and the Commerzbank, and Qatar likely to be seen as wanting to influence that process and perhaps thinking that it can profit from the going together of the two largest private banks here in Germany in the end. If they merged, which is a big if, but if and when they merged, perhaps profiting from saving a lot of costs. That's not a given, but that's market talk this Monday.
All right, thank you very much, Ulrich. We will watch out for Fed's decision this week. Enjoy the rest of the day.